Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance. My name's Goose.
My name's Gabby.
And what are we talking about today, Gabby?
We talked about a whole bunch of stuff in this one, actually. We talked about largely like slowing down and speeding up at the same time.
That sounds
Cryptic?
about right. Yeah, totally. So we talked about how the market is operating in two speeds, how buyers are operating in two speeds, how to think about value adds and property selection in this kind of environment to maximize your returns, and how to really use this environment to your advantage, and how to avoid getting stuck in analysis paralysis, and also avoid succumbing to FOMO. So very useful, short, impactful, valuable episode that I know that you're going to get a lot out of. It's a little kind of a bite-sized one, I felt like this time, but it was a bite-sized full of goodness and nutrients. So without any further ado, should we get stuck right on in, Gabby?
Let's do it.
All right, guys. We'll see you on the inside. Hey guys, welcome back to the Investor Lab. You're with your pals. I know how you like that, Gabby, when I say that.
I do.
You're with your pals. We are your pals.
Your pals.
Gabby, how are you?
I'm good. How are you?
Yeah, I'm good. I'm a little tired, but I'm good. For those of you who are watching this, you might say I look a little bit unkempt. I'm unshaven, but I've got that kind of beach bum vibe going on. That's what I'm trying to do. I figure if I don't shave and I get a little bit rough around the edges, it looks like I'm on holiday. So maybe I can kind of trick myself into feeling like I'm on holiday. So that's the strategy. That's my strategy.
The no shave, no shoes, board shorts. Let's go. Well, we did manage to go away this weekend, just gone. So maybe it's a hangover from Shell Bay.
Indeed. Awesome. So what else has been happening? What's going on? What are we talking about today, Gabby? Like, there's so much happening at the moment.
So we really just want to dig into the current market is obviously very hot, right? And there's a lot happening, a lot moving quickly. And really we just wanted to it's a bit of a public service announcement in terms of helping people to actually slow down a little bit and to make sure that they're actually really considering their decisions in this market and not getting caught in the FOMO of I just got to get in and, there's all this competition, so I need to just kind of lower my standards and just accept anything. Because I see that people might get into a bit of trouble in doing that. So
yeah, Ted, it's a really funny kind of market condition at the moment, isn't it? Right? I was actually thinking about this the other day. It's actually really bad for real estate agents, right? And most people are probably thinking, what do you mean bad for real estate agents? Houses are just selling so quick, but there's basically no stock on market, right? So real estate agents are, yes, it's very quick to sell a property, but they just can't actually get any properties to sell, right? So, so I think in some ways, I think it's probably a more challenging environment for them, but it's also a challenging environment for buyers. But there's kind of like, I think there's a couple of things that are driving that. We've sort of talked about it a little bit before, but there's like stock availability and all of these kind of things that are lending into that kind of speed and heat of the market. But it's also not the same everywhere. And also, well, I mean, it's not the same everywhere, but I would suggest it is still pretty tight everywhere. I was just thinking through that as I was saying it. But also, one of the things I'm most excited about is the fact that the market's actually slowing down. I think that's awesome.
And that's obviously, if we think about that FOMO aspect that we're talking about, like that would help people, right? If things are starting to slow down, you can take a little bit more time and really think through, is this the right asset for me? Does it tick all the boxes? Does it fit the Holy Trinity?
Yeah.
Am I ready to go? Let's go.
Versus
in the last, 6 to 12 months, it's been just like smash and grab whatever you can get for people.
Pretty much, right? So, I think it's interesting because like it sounds a little contrarian, right? Because surely we want property prices to be booming, right? Surely we want property prices to be booming. But I don't know if that's actually true. Like I would prefer strong, sustainable, long-term growth. And I mean, I've been saying for probably 18 months now that I think we're at the start of a 5 to 6 year boom. It was starting to look like that might not be true because the prices were going so fast. And if they go too fast, right, they spike and then they come down. And the boom, it's a short boom, and it's exaggerated. But there's a couple of good things about the market slowing down. So it makes it's going to elongate the performance of the boom over a longer period of time, which I think is a very, very good thing. I would actually much prefer to have it be a little more sustainable for a longer period of time than to go really fast, too quickly. But also, it normalizes the market. It allows for stock levels to rationalize. It also means that APRA doesn't have to try and put the brakes on property as much, which means that less restrictions will come in to borrowers and all of this kind of stuff. Like it'll make sure that we can keep doing what we're doing for a long period of time. And look, to be quite honest as well, from our perspective and what we do with all of our research, we're spending a tremendous amount of money on research and data science and all of this kind of stuff to make sure we're targeting the right suburbs in the right place at the right time and all of that kind of stuff. But in a market where it feels like everything is just booming, it's kind of like it's harder for people to be able to see through that noise. And so I'm excited actually for things to kind of normalize a little bit more. So just quietly, so we look better because we're going to be standing out a little bit more. So yeah, it's all good.
Yeah, for sure. Yeah. And I think like with that, right property, right place, right time thing as well.
Yeah.
Coming back to the right property, to meet your brief, but then also like the part of your brief where is it the quality that you want? And so if part of your brief is that you want to do some kind of value add, some kind of cosmetic reno, some kind of subdivision, something, actually really digging into is that property actually going to give me that? And I think people, in the heat of the market, just kind of see a property and they go, this is what I want, and it's in the right location, it's the right time. I'm gonna jump in and buy it, and not really thinking about, okay, what is the work that might need to go into this? Is it suitable to my whole brief? Do I have the bandwidth to do this kind of work?
Yeah.
And then the flip side, if your brief is that you want to do no works, and you actually, you might find a property that on paper, on the listing online, in the photos, in the copy, on the ad, everything sounds amazing. I might say recently renovated, like stunning home, this kind of thing. And then people might kind of just take that as gospel and just think that that's, sweet, I found a winner, I don't want to do any work, and this one says it's recently renovated, so that's awesome.
Yeah.
And just kind of take that and then go and buy it. And then people are actually turning around with quite significant issues in properties at the moment because agents know that it's a seller's market, right? They know that there's low stock availability, but also how quickly things are selling and how much demand there is, that they can kind of like hide some of the detail about maybe more of the bigger structural issues, or people might do flips and they have not as good a quality in the actual renovation, where they just kind of do a lick of paint and be like, hey, it's a brand new kitchen, when the quality isn't there. So again, it's just kind of slowing down and thinking through and doing your proper due diligence, whether that's always get a building and pest inspection. Make sure that you have qualified tradespeople going in and telling you, reporting back to you as the potential owner, what is the quality of this asset that I'm about to buy? Are there any structural issues that I need to be aware of?
Yeah.
And to be clear, like structural issues are not, if there's a structural issue, it's not an immediate like no go. It's just so you have understanding of what is coming up in the future for me. Does that fit into my brief? Do I have the bandwidth and the resources to be able to deal with that? Versus not knowing that and I'm rolling into a property that has a lot of structural issues, and then you're stuck with it because you didn't really take the time beforehand.
Yeah, totally. Yeah. You're right. You touched on a really good point there. Just because the property's got problems doesn't mean don't buy it. It just means be aware so that you know how to factor that into the negotiation and all of that other kind of stuff. Yeah. It's an interesting one, right? Because going back to what you started saying at the start of that little monologue around buying the right property in the right place at the right time, the right location. So the right suburb will probably do about 80% of the heavy lifting. The right street level location will probably do about another 10% of the lifting, right? So you've got about 90% of the value is going to come by getting the right property in the right place at the right time, right? Mm-hmm. So the value adding component starts to become a pretty small factor in it.
Yep.
It might even be, maybe even the right street location might be 15%, right? So it might only be about 5% comes out of the real value add component, right? And that's really the secret sauce. And one of the things that I've learned since we started doing all of this is that, if you could just focus on getting the right property in the right place at the right time, you're going to outperform most other people. And so having a focus on value adds in this environment, I actually think can be a real bum steer, right? Because you might end up looking for properties where you can add value, right? So bearing in mind there's 40% less stock on market, right? It's a very hot market, all of that kind of stuff. So you might end up seeking out the wrong thing, right? So in a quest to, for example, find something that you can subdivide, you might end up buying in an area which is going to get subpar overall growth performance, or in an area which may have lower tenantability and all of these kind of things. So I think that people really just need to kind of get switched on to the fact that getting a property in the right place, in the right street, right place, right time that's the secret, right? That's where it all happens. Value adding shouldn't be the thing that you look for, the reason to go and buy a property. It should be like the little kicker. It should be the little sweetener. It should be the after dinner mint, right? Where you go, oh, this property is awesome and I can't wait to be the owner of it. And by the way, in a few years' time, if I feel really juiced up and I want to go back to it and milk it a little bit further, I can go back and I can do X, right? So thinking about that can actually help shape people's opinions and decisions on how to approach this kind of stuff in this market. Buying a property that's on a 700 square meter block, even if it doesn't have any site access, actually, depending on the local conditions and whether, if there's minimum lot sizes and stuff, that could actually be a really great subdivision opportunity in 5 or 10 years. You could just knock down the whole house, build 2 townhouses, off you go, So people have got to get a little bit more elastic in the way that they're thinking about all of this kind of stuff, I think, which kind of then goes back into what you're saying. So let's say you find a property and then absolutely don't get caught up in FOMO, and absolutely make sure that you're getting the right inspections done and doing all the right stuff and everything like that. But then if you uncover something, that's not necessarily a bad thing. It actually could be a hidden way for you to add value, right? Or it could be an opportunity for you to get the right place, right time, and then also get it for the right price, right? So you might be able to, let's say you find a property and it's like, oh my God, it's got roof issues or something. Well, cool. Rather than saying it's got roof issues, let's walk away. Maybe say, well, how much will it cost to get a new roof? Let's say it's 20 grand or something like that. Maybe you can negotiate $20,000 off, or maybe you can actually negotiate for them to replace the roof before you even buy the property. Or maybe you can actually negotiate $30,000 off for the hassle, So there's always an opportunity in every adversity. So yeah, I think it's a double-edged sword, right? So on the one hand, you don't want to be caught in FOMO, but on the other hand, there's also 40% less stock on market. So the opportunities that you do look at, you need to be able to look at them critically and understand them, and then understand how to use that to your advantage, even if it isn't necessarily the perfect property as well.
Yeah, I think the value adds angle is a really funny one for us, right? Because we've, the Holy Trinity is what we search for and buy for our clients. And so it's kind of what's the phrase I want? It's like it's kind of put us in a little bit of a corner where everyone wants a value add, right? Ideally, everyone would have a value add because everyone's got that lever that they can pull. But in this current environment, this is the kind of environment where people have actually already pulled their levers. Like if they've got value adds in their properties and they want to sell, it's kind of in a peak market where they may have already exercised that. So whether that's a reno, like you do see properties coming on which are more recently renovated because they can capitalize on selling that now. And so in a lot of ways, buying a property in this current market and getting in the right asset at the right location at the right time, just getting kind of a foundational property is a win in itself. without the value add. Like, sure, it'd be amazing to have the little extra value add, like you said, to have that little after dividend. But in the current market, it might not actually be realistic. And it's like, if you're purely, if your whole strategy is around value adds, sure, like you can hold out on that. And
if your whole strategy is around value adds, probably the wrong strategy. That's what I would say.
Sure, but you know, if you just kind of want it as a little bit of a side, like in the back of your head, you're like, oh, I'd love to be able to subdivide it one day, which I think people, you know, I think people in Australia as well grow up with, like, they just want some kind of sizable land, you know, land goes up in value,
which makes sense, right? You know, the money is made in the land and all of that kind of stuff to a degree, right? So
yeah, but I think if your specific strategy for the very next purchase does not involve a cosmetic reno or a subdivision or a strata subdivision or something, and you come across a property that is really strong in the foundations, like, that is an amazing find in this market as it is.
Yeah, 100%. So it's probably worth anchoring this a little bit, right? Because this isn't just kind of theory, right? So most people will be familiar with the fact, most people listening to this podcast will be familiar with the fact that for a long time we haven't actually been able to buy any properties because we haven't been able to get finance. So I'm really stoked to say that has now changed and we are on the hunt. We're going out, right? Woo! And so what's probably interesting is, like, well, what are we doing? Like, how are we approaching this, right? So and to be quite transparent, we're just looking for basically foundation level properties. And the reason for that is because we understand that, you know, 90 to 95% of the heavy lifting is going to be done by getting the right property, right street, right suburb, right location, right price. And we're completely flexible on the value adds, right? So it's like, oh, if we get it under market value, that'd be awesome. Does it need a cosmetic renovation? Okay, cool, we can do that. Maybe it's a cosmetic renovation in 5 years' time. You know, that's also a thing as well. Oh, it can be subdivided. Awesome, sounds good, right? So it's about being flexible and malleable, I think, with that kind of stuff. And the other thing as well, when thinking about value adds, it's not always about going and swinging a hammer and trying to add value today. It's about what can be done in the future. Because, as I kind of alluded to, if value adding is the center of your strategy, it's probably the wrong strategy, right? Because you can end up finding properties which will allow you to do the value adding, but which may actually compromise in other much more powerful fundamental aspects of property selection. And so when you're looking at something, you know, if we actually go back to first principles, like how do we come across this, right? So you and I bought the wrong property in the wrong place at the wrong time, lost a bunch of money. Simple, right? We worked out that if we were to not do that again, what characteristics would the property need to have? Well, we'd want it to go up in value really quickly, not down. Great, growth. We'd want it to produce more income than it was going to use. Great, positive cash flow, because we basically bought a negatively geared apartment, right, off the plan, right, which was dumb. Right? We've since sold it, and that was good. And the third element was that we wanted to be able to control or add value in some way, like some way that you could go and change the economic profile of the property if you got it wrong, right? It wasn't about going, let's find things and flip them. It was like, okay, if we can identify an area of good growth, great. And if we can get it with a decent yield, awesome. But what if we're wrong? Like, what if we get it wrong? Okay, well, if we get it wrong, then what are we going to be able to do to add value to it? So buying something that is in great condition, but maybe is a little dated. Maybe it looks like it's got like a 70s style kitchen in it, which could be in immaculate condition, right?
People love 70s style kitchens these days.
So back in, I'm big on it.
The brown, just all brown and orange.
Yeah, I love brown. But you get my point though. Like, it can be in great condition, but just be dated, and that can still be an opportunity. If you can just rent it out straight away, wahoo, fantastic. You don't even need to do anything. But then in, say, 12 months, 24 months, 36 months, whatever, you could then go back and just give it a little bit of a spruce, new paint, maybe stick a new kitchen in there, all of that kind of stuff, and then add value then. The added bonus of doing that in that way, right, means that when you're buying a property and let's say the value add is cosmetic renovation, right, it doesn't mean buy it and do a bunch of work. It could be buy it, tenant it, and then in 12 months' time, you can use the cash flow that you've generated and also some of the growth that you've received to then fund the value add. so the property can pay for its own value add. That's the magic that we're looking for, right? So it's not all about just finding things and trying to get stuck into it. And I think kind of circling back to where we kind of started this, right? It's about, this market is really about getting crystal clear on what your objectives are, and then being able to look at each situation, look at all of the moving parts and all of the pieces on the chessboard, and know how you're going to make the move, right? Because I think that there's two types of buyers in the current market. There's the buyers whose standards are way too high, right? And they're like, nope, must be 9% yield, must, be in brand new condition, and must also be subdividable, or it's no good, right? There's people like that in the current environment, and their standards just aren't. There's a great quote, and I can't remember who it's by, but when it's something, I'm going to butcher it, but it's something like, when the facts change, when the facts change, so does my opinion, or when the facts change, I change my mind, what do you do, or something like that. And it's kind of like in an environment that is changing, those people who aren't able to then adjust and adapt are the ones that are going to get left behind, because they're going to be looking for things that don't exist, right? Or they'll end up making bad choices based on the wrong metrics. So that's one type of buyer. And you've also got the other type of buyer who has just got so much FOMO that they're like, I'll buy anything and I don't care, and they're not prepared to do enough due diligence. Now, due diligence doesn't just mean get a building and pest inspection and a pre-purchase inspection. It's also like, do you understand the public housing percentages in the street? What's the percentage of owner-occupiers versus renters? What kind of growth drivers are there? How long are those growth drivers going to be there? What's the migration pattern? What's all of these kind of things that like lend into, is this a good decision or not? So anyway,
it's a good point about the street level, because I think, a lot of this podcast, we talk about the location specifically. So like identifying the right locations and, all the drivers that go into, quote, hotspots, kind of those areas, or emerging markets as well. And people kind of might just then go, all right, I found a suburb that I think is going to grow, and this is my suburb. And then just kind of plug that into realestate.com, and then anything that comes up in that suburb that comes available, they're like, that one, in my price range, kind of ticks my boxes, that one. And we'll kind of just skip over the street, They'll just think, it's in the suburb I want, it's in my price range, let's go for it. Whereas the street level side of things has a massive impact on the growth potential of it. As you said, like, what is the quality of the street in terms of the amount of renters versus owner occupiers? Because if there's more owner occupiers, you're going to have a better kept area, and it's going to grow better and be more appealing into the future. And so, I think that the street level side of things as well, you're right, in part of the due diligence for people is really important, particularly in this market.
Totally.
People rushing in and just going, I'll just buy that one.
Totally. Yeah, most people don't get it, right? Because they just think, what? Hang on, right suburb. But the easy way to think about it is, let's use Bondi, because we're in Bondi, right?
Are we in Bondi?
We're in Bondi, in case you know. We're talking about all this stuff. But like a house that is right next to the ocean, right, is going to be a 3-bedroom house that is right next to the ocean, overlooking the beach, is going to be worth a hell of a lot more than one that's way up in one way up in the back streets and on the side of a hill, and south facing, and all of these other kind of things, and it could have the same postcode, right? So understanding that it's not like, that's a very simple way to kind of break it down, right? Now, not every suburbs have beaches and whatever, but the point remains the same. You've got all these various aspects like public housing. You've got proximity to the point of greatest utility. You've got convenience. So is there public transport, walkable shops? Is there all of these kind of things that kind of go into finding, is this, you've even got other things as well, like what's the proximity to a power transfer station, right? So a lot of people don't even look at that, right? So we look at it, if it's within 200 meters of a power transfer station, it's like pretty much gets vetoed, So there's all of these other
lifestyle factors. I've always had a theory that the areas in the streets with bigger trees are better growth.
You also had a theory though, Gabby, that
I've got some good theories.
Yeah. And what was the Commodore theory of growth?
Oh, the Commodore one. Basically, just when there's heaps of Commodores on the front lawn, holding Commodores, like that area is going to gentrify in a couple of years.
It's prime for growth. Yeah. So
the other one was laundromats, swanky laundromats. You know when you get the swanky laundromats and they've got like coffee or they've got neon lights that are like cool neon lights, but not lame. Yeah. Anyway.
So if there's lots of trees and also lots of Commodores on the lawn and also nice laundromats, it's a winner.
You're on.
I think the Commodores come before the laundromats.
They do.
Okay, got it. Nice. Nothing wrong with Commodores, guys, but if you're a little secret tip though, if you're cruising around, that's actually how we do it. We say we do all this research, but all we do is cruise around on Google Maps looking for Commodores on front lawns.
That's how we do it. We've got AI to just identify all the Commodores and we just go
there. Totally. So what's your takeaway out of this so far, Gabby?
Slow down, which is
hard. Slow down and speed up
at the same time. That sounds right. That sounds like your kind of advice. Just it's really hard. It's really hard because particularly, you guys listening to this podcast is you want to get involved. You want to get amongst it. You want to start buying properties or keep buying properties or and we're not discouraging that. Like, maintain your activity, maintain your interest, keep going for 100%. Your goals. It's just about making sure you're doing the right DD before you just jump into something.
Totally. And just on that point as well, like, I don't think people should be sitting on their hands either. Like, just because it's tough, just because it's a tougher market, doesn't mean you should sit around and do nothing, right? I saw recently in some media, like, property prices are going to fall. That's nonsense, right? It's absolute nonsense, right? And if you just quietly, Martin North, if you're listening, right? So it's Martin North who has the propensity to digital finance analytics, the propensity to have all these kind of doom stories, and then that gets proliferated through the media. But then people, look, the research that Martin North does is great, right? It just tends to have a negative spin, is what I've found, right? Mm-hmm. So that gets proliferated through the media, and then all of a sudden there's a whole bunch of headlines saying things like, house prices are going to fall. It's absolute nonsense. Guess what? House prices are falling right now in some places. House prices are going down really, really fast in some places. And house prices are going up really, really fast in some places. And that's going to be the same next week, next month, next year, next decade. Nothing is the same, right? So the point that I'm making, though, is don't sit on your hands waiting for some, like, if the market slows down over the next 6 months, maybe I'll get in then because it'll be a little easier. It's operating in these kind of environments, which is what gives people a competitive advantage, I think, right? And there's more to be gained by increasing your tenacity and increasing your resilience than there is by sitting around and waiting for a perfect environment to buy the perfect property, and not taking any action at all. So
100%.
Yeah. So, all right, guys. Well, I think we've covered some good ground today, Gabby.
Yeah, I think so.
Awesome. All right, guys.
Cool.
Well, we'll wrap it up there. I hope you found this valuable. It ended up being just a wide-ranging conversation, but I thought it was a good one. Hope you got some value out of it too, and can't wait to see you on the next episode. Bye for now.
Bye.